All right, so now that we know how the summary pages work, we can dive into one of the main use cases of it. And again, this is probably not the only use case, but this is the main use case we've seen around. So that's the one we're going to discuss. And it's how to find continuation plays using the summary pages. So to find continuation plays, there's basically 6 steps. And I just put them here, and you can always find these steps. Like there's written tutorial. These tutorials are all in written form as well, and you can find them in the Discord. But step 1 is form domain bias using distance statistics. Step 2 is apply filters for precision. Step 3 is review time-based statistics. Step 4 is scan price action and apply TA. Step 5 is conduct a statistical deep dive. Step 6 is check other time frame biases. So we're going to dive into each of these right now. Step 1, forming the main bias with distance-based statistics. So the important thing here is that we already know from the distance-based statistics tutorials that, we know how the statistics work. So we know that the lower the value of this is, the P1s with bigger distance, the more likely P1 is to hold for the day. We also know that the higher the value of the percentage of days with more distance is, the higher the chance P2 will be taken out. Again, this is all already discussed in the distance statistics tutorial, so check those out if this doesn't make sense. And finally, we know that the P1, P2 direction column indicates whether P1 is the daily low or the daily high, right? So bullish here means P1 is the daily low, which is something we also discussed. So we can use this knowledge to form a bias in the following way. The lower the value of percent P1s with bigger distance, so the lower the value of this, and the higher the value of percent days with more distance for a given asset, the higher the chance price will continue in the direction of P1 to P2. So in this direction. So to put that in a graph, I made it here. The lower this percentage, right? And the higher this percentage, the more likely price is to continue into this direction, right? Because if this is low, it means that P1 is very likely to hold. And if we're bearish, we know P1 is the high, right? Because we're going down. So the high is very likely to hold. And if this is also, in this case, this is not high, like this value is not high, so in this case it would not be a high directional play, but this, for example, here, link, very low probability of taking P1 out, high probability of having a day with more distance, and we're going bearish, right? So then the conclusion would be that this here is a good continuation play for further downside. All right, that's the main gist of it. If you know this is probably 70% or 80% of it, right? This is the most important thing you need to do in order to determine high likely directions. All right, pro tip. You can spot these directions very easily using the multi-time frame summary page, so the MTF summary page. And that's right here. So basically, I don't want to talk about this too much. I'm going to talk about how this exactly works in the next video. But basically what it is doing is this logic right here. So the lower this percentage, the higher this percentage, and the more likely price to continue in this direction. This logic is translated into strong bears, interpretations, and so on. But we're going to dive into this more. So in the next video, I'm going to talk about how exactly this works. But basically, it is using these statistics to do it. So it is a very easy way of interpreting this, but once again, it will all make sense in the next tutorial. For now, this is step 1. So again, this is form domain bias using distance statistics. Now we're going to see how to apply filters for precision. So I'm just going to show you this right now. So what we can do is we can apply filters, and there will be a separate video for this, but if you're here on the right, you can see the filter bar, right? And if you press on any table, and in this case I'll press here on the title, you will see filters apply here. Now, you can define the thresholds for yourself, but for example, I could say, well, I'm only interested in days that have less than 25% for this value, and then you actually have to press the 25. The percent is important here. Apply filter, and then we'll filter out all the assets that have more than 25%. And again, I'm using 25%, might be different for you. You might be interested in only less than 20% or even less than 15%. I don't know, whatever it is that you think, or whatever fits your system. And then I can say days with more distance, well, I want to have at least more than 55%, because 28% is low probability to go further. So if I want to take a continuation play, this is not it. So then I can say 55%, and then there you have it. You're only left with the assets. A very simple overview with all the assets that have a low probability of taking out P1 and a high probability of going further. And obviously, the bigger this, the lower this is, and the higher this is, the better. But now we only have assets that have a good probability of continuing further. Now, one more good thing to mention is that you can save these filter settings right here by adding a personal bookmark. But I will make a video about that later on as well. So now we have done apply filters for precision. So now we only see the ones we're really interested in. Then review time-based statistics. Now things get easier. So what you could do is that you could select all these right here. And then you see here only the time-based statistics for each of them, right? So I can, for example, see ETH right here, hour 2 P1 and hour 10 P2. And then, well, you can see the time-based statistics. So not the best, not the worst. Like these are better, obviously. But you know what to do with it. You know how to interpret this. So you can use this to further see if there's any confluence in terms of time-based statistics. So that's the next step. Very easy. Fourth one is to scan price action and apply TA. Now, what I mean with this is twofold. So there's scanning price action is one thing and applying TA. What I mean with scanning price action is that you can go to the charts and very quickly see if a price actually looks good. So for example, and I'm gonna make another video on this that explain this in detail, but I just wanna explain it very briefly. So there's some giveaways where you can very easily spot. So for example, I can go here and say when it was, for example, right here, I think we had a good setup. Let me do it like this with a good setup. When we had this example, we had P2 with hour 10. And for example, what I would like to do is that I always go to the chart. Let's say, I don't know what the probabilities were in this one actually, but let's say this was a good probability setup. For lower, hypothetically speaking, I see that the low here is on the naked daily point of control. Now that's one of the signs for me that I don't want to trade against that. That's like always a good point to reverse and have low probability pivots. So this is something I would not trade against. Again, I'm going to look into this more, but I'm going to make a separate video where I explain what kind of things I am usually looking for. But these are kind of like very easy, very quick scanning of pivots, right? For example, also I see here we're in a tight range, so that might be something. But again, I'm going to explain that more in a later video. What I mean with scanning price action is just going, like looking at the assets that are in there and just deciding for yourself, okay, I actually like the way that pivot looks. I actually don't like the way that pivot looks. And there's very easy ways. For example, you see here we took liquidity with the naked data point of control, though. So this is what you want a pivot to look like, in my opinion. And there's certain red flags. And you might have, if you know TA, then you're probably able to spot that yourself as well without even seeing the video I will make about it. But again, I don't want to dive into it too much, but we'll discuss it in a later video. So that's what I mean with scan, that you don't even apply any TA, you just go to the charts. In my case, I always have this indicator on, and then I just see, okay, what does the pivot look like, and is it a pivot that looks good in terms of PA? If not, then you can discard it already. Now, next up is applying TA. So in this case, say you have, now the pivot looks nice, then you can apply some TA. Let's go look here. I have an example ready right there. There we go. So you can apply some TA. So this was a high probability setup. I didn't paste statistics here, but then he had P1 at hour 0, P2 right here, and then we retraced to that 0.5. So this is where you also can use that retrace column right there that we discussed, because it will show you if you're trying to take a continuation setup, right? Then the higher this retracement, the better it is for a possible RR, depending on how you do it, right? So what I mean with TA is that you can define, for example, entries. And this is really, this is out of scope for Minoma Analytics. This is really TA that just depends on your system. But say for example you found a fair value gap somewhere, so you could, one thing to do is, for example, say, okay, I have this fair value gap, and then I will enter there, and my stop loss will be somewhere above that. But another thing you can do is that using P1 as an invalidation. But in order to use P1 as an invalidation, obviously you want the retracement to be, well, maybe at least 0.5, because that will give you at least over a 1 RR trade, right? And a 1 RR trade can be enough if your win rate is high enough. But again, this really depends on your system. But you can use, and P1 is often used as a invalidation point for a continuation trade. Because if you know, right, that this is very low and this is very high, so we have a high probability of going further into this direction, then you know this is actually very good invalidation. P1 is very good invalidation, because you see here literally, you know, 7%, only 7% of days would take it out. Then that's a very good invalidation. But for that, obviously, you need the retracement to be at least to the 0.5 or higher. And then you can use, in my opinion at least. And otherwise, you just need to use your TA and whatever system you use to determine the entry and take profits. So in this case, P2 is always going to be a very good take profit target, obviously, because you can take it out and then go back up. But you can apply your TA to this as well to determine the take profit targets. And maybe you have a POI, the point of interest, below it somewhere, and you can choose to target that. Usually, the higher this value is, the more likely it is that you're gonna break P2 with some distance, right? Because if 80% of days have like a lot of distance to cover, then it is quite likely that you're not just gonna SFP P2, but that you're just gonna fly past it. All right, then the last one, or the second to last one, conducting a statistical deep dive. Now, what I mean with that is simply, this is the overview, right? But you can get more in. So for example, if I see ETH right here, I see ETH is, well, this 10.6 or let's take time-based statistics as an example. I see P1 at hour 2, P2 at hour 10. I just see the time-based statistics, but I might be interested in seeing, well, you know, oh, I already have ETH selected. How long ago has it been? And let me just change this to P1, P2. How long ago has it been that we had an hour 2? So then now I can see that it's been 43 days since we had the last P1 at hour 2. So for me, this might be enough reason to say, well, oh, this is not happening lately. You know, it's been over a month. So maybe if your PA is also stating, and in this case, I think PA is stating that you want to be cautious because the market's moving up, the market has reversed. You can see Bitcoin's leading the way, and we all know that Bitcoin leads. So if you see that, then that might be enough for you to say, well, I'm going to be wary, because not only do we have that P1 at hour 2, which is as a naked daily point of control though, which is pretty good, but not only do we have a P1 at hour 2 with the reversal on the way across the board, we also see that's been 43 days that it's happened, right? And you can press here and kind of see what is going on with that. And you should be able to see that it's happening a little bit less. It has happened a lot, but now it's starting to happen less. But, you know, so sometimes you see, this is not even that extreme an example, but sometimes you see that a certain pivot has a high chance of happening, but for example here, hour 13 has been happening way more lately, plus 9.2%. It's really quite a bit. So these kind of insights can help you really say, or for example here, if you have hour 5 and you see 1147 days since hour 5 has been in P2, that may really give you the final confirmation you need. So this is what I mean with the statistical deep dive, that you just look at this asset, whichever you have selected, and then go into more into statistics here itself. I like to use this table for some deep dives too, but that's covered in other videos. Then finally, check other time frame biases. So say for example, I have now decided that, well, I have decided that ETH doesn't look too good because of the rest of the market, but let's forget about that for a bit and say I have decided that I want to take a short because of these statistics. And again, this is purely hypothetical because in my opinion, when Bitcoin is mooning, you don't want to do that. But purely hypothetical, I've said, okay, I want to take a short. What I always like to do is look at other time frames and see if there's any confluence or any alarm bells going on. So what I could do is go to the 4 hour, for example, say like, well, what's the 4 hour doing? Or let me put it like this. So say I'm interested in ETH and I'm interested in Doge. So then what I can do is select ETH and Doge. And then I'll have these, and then I can, for example, say, so what one thing I always want to look at, so this is a strong bias to go down, purely statistically speaking. Today I don't think it will play out, but oftentimes it will. With strong bias to go down, then what I don't want is the 4 hour, for example, to have a strong bias to go up, because that will give me much less confidence to enter a trade, right? Like then I'd rather wait, because that would mean that it is retracing. So then what you could do, one, is go to the 4 hour, and then you see, okay, what's that doing? Well, it's bullish. It's very low chance of taking out the low, at least in this 4 hour block from 4 p.m. to 8 p.m. But it's also, it seems a little bit exhausted, right? So this is not necessarily too alarming, but an easier way to do this is go to the MTF page. And again, I'm going to explain this page in more detail, but basically what it does is that exact logic that we have discussed. What it does is translate that into the distance or into a more easily interpretable format. So basically it does this: the lower this percentage, the higher this percentage, the more likely price to continue this direction, and then you get that multi-time frame page. And this is just an easier way to interpret it. So right now I see strong bear and bear for Doge and ETH, but I see bull here, exhausted bull here, so that's not too bad actually. But I see a strong bull for the week, a current bull for the week here. So, you know, I think the main, for me, if I see strong bear here and bull here, that's not necessarily a warning sign. An alarm signal for me is if this is strong bear, but this is strong bull, or this is strong bull, right? If you have a strong bull signal here, and again, this depends on the thresholds you set. We'll get into that in the next video, but basically what it means is that it just has that, according to your threshold settings, this is very low and this is very high. So therefore you have a strong chance of further continuation in that direction. Then I would wait, because if, for example, this is strong bull, that means that the current 8 hour has a high chance of going up, and therefore we might be retracing on that daily. So the daily is going down, but what that statistic is saying is, well, you know, but this is retracing right now, so you want to wait for that. So we're looking at Doge right there. So what it's saying is that, well, this 8 hour candle, and again we can go here and see that this 8 hour candle still has bullish probability, so you want to wait until at least that is played out if you want to be safe. Again though, like this depends. I would be more alarmed if I see strong bull, but I don't want to dive into it too much because I still have to explain how this works. We're going to do that in the next one. All I want to say for now is that if you want to look at what the other time frames are doing, you can easily look at this page. And there are a couple of things you want to look for. So first of all, I already said it. Are there any time frames that have a strong signal in the opposite direction? So we're looking at a bearish trade, so short. Are there any other time frames that have a strong bias in the opposite direction? In that case, you might want to be cautious, especially if it's a lower time frame, because then you know at least now like it's likely to go in the opposite direction. So then you want to wait. I mean, you probably want to wait, depends on your system, so I'll leave it up to you. Then any other time frames showing exhaustion into our direction? In this case, no, it's showing exhaustion into the opposite direction. But for example, if you have here a strong bear and this is exhausted bear and exhausted bear, that means, basically what that means is that the move is running out of steam. Again, we'll get into that later in the next video. And then finally, are there any other times that have confluence with your bias, which would be a good thing, right? So if you're looking for a short here, it would be nice to see maybe the week at bearish as well, or the 8 hour with bearish statistics. Again, these are all just, it's all just this logic mapped into a more easy to understand format. So basically you're just looking at this, and what it just prevents you from having to do is to go through the process where you have to, when you want to check other time frames, first go here, then check what the 4 hour is doing, and then you have to interpret that. It's like, oh, 5.33 and 33 bullish. So the MTF page just helps you to determine that better. But this is the whole system you have to go through to find high probability continuation plays. But again, the most important part is this right here. This right here is 80% of it, right? This needs to be, the lower this percentage and the higher this percentage, the more likely price is to continue into this direction. If you know this, then you know your bias. You know the P1 is likely to hold, and you know P2 is unlikely to hold. So you know you got to trade into the direction of P2, right? Or at least that's the way this system works. And then when you know that, you can, if you know that there's a strong bias to go down, you can focus on shorts. And that's when you apply your TA. So again, form the main bias using distance statistics. This is 80% of it. Apply filters. Review the time-based statistics. Scan the price action and apply TA. So this is where you look for entries, and right here, look for entries, look for take profits. And you already know the bias, right? For example, if you know there's a high probability of going up, then you can look for take profits above the P2 or wherever your POI is. Then you conduct a statistical deep dive. So you look at deeper into these separate pages. And then you check other time frame biases. And that's it. That is the basic gist of it. That is the basic gist of it. Just checking if I've covered everything. Yeah, I've covered everything. So this is the way you find high probability continuation plays using the dashboard. And this is combining all that we have learned so far, especially with these. So these are the most important statistics. These are for confluence. With this tutorial, can definitely give a lot of confluence, but especially this is the most important part. The lower this percentage and the higher this percentage, the more likely prices continue into this direction. So I hope that made sense. Again, this is one of the main ways of using this dashboard. So I hope you enjoyed that. If you want to review the written tutorial where everything is written down nicely, you can find it in the Discord. And I'm sure that will give you a nice cheat sheet. Always, if you want to see this, for example, it is in that written tutorial, and then you always have a cheat sheet to look back to. So that's it for the main way of using the summary pages. Next up, I'm gonna explain how exactly the multi-time frame summary pages are determining their biases, and you have seen already a little bit of it, but I'm gonna explain it thoroughly in the next video. So I will catch you there.